Welcome back, everyone, to Living Your Greatness. And today I am super excited to welcome back the one and only Gwen Preston. So, Gwen, really good to see you. And you were actually one of the first on the Living Your Greatness podcast.
I was. It seems like both a very long time ago and not that long at the same time, right? But yeah, I remember that conversation well.
Totally. It was actually 5 years ago. So that
Was
was
it?
back,
Okay.
that was back in
Okay.
2021.
Okay.
And it's funny how to look back in time. I always find it reminds us, even as investors, why we always want to be patient. Because at the time, gold was 1800 and even silver, was trading around, I think, $27 at the time.
I-
And if we do the math, looking at where we are today, even with this week's big pullback, gold is pretty much up 155% from there. 4,660, and even silver is at $73 from there. So 167. So it's less about the price right now, but it's more reminding people why it's so important to be patient. And even in these pullbacks, totally normal, totally healthy. So I kind of want to get started, Gwen.
yeah.
I know you're super passionate about precious metals and the whole natural resource space. I would love to first get an update from you on what are you seeing right now in the financial world? What are you maybe concerned about? Or what do you think more people should be actually paying attention to? Because there's a lot of noise out there right now.
Yeah, interesting. So yeah, there's a huge amount of noise out there right now. I'd say often there's a fair bit, and right now it's very, very loud. And for reasons that are real, a bunch of them for sure. Um, I guess the financial world feels more real now to me, or maybe, yeah, more reflective of realities now than it was a couple years ago. Um, I know that I'm a little bit biased in that because I am sort of a resources focused person. So, commodities coming to the fore always makes me think that the market is being a bit more rational. And tech, the corollary to that, of course, in the big, if we're just talking big picture here, is tech. And again, I think the market is a bit more real or perhaps a bit more discerning now than it was a couple years ago. That's again, I'm painting with very broad strokes, but I, the deglobalization is reversing some of the unintended consequences of globalization. And what the main thing that I'm sort of thinking about there is this idea that, rougher work would be offshored, so that those places that had more developed, to use words that I hate, societies, could focus on the more sophisticated work. But that failed in a lot of ways, and it failed. One of those ways is that populations in the places where the manufacturing was offshored often didn't either weren't able to or didn't embrace or the opportunities of that more sophisticated work just didn't coalesce, didn't come together. And you can point fingers and whatever you want there, but at the end of the day, that's the truth, is that it just didn't quite happen. Um, and so, deglobalization, which is happening nominally for different reasons, is also reversing some of that unintended fallout of globalization, which sort of hollowed out, as people like to put it in simple terms, like hollowed out the working opportunities for the middle and especially lower class. And so, resetting how systems work when unintended consequences of a system ended up having serious impact, that's always a good idea. Now, whether that's happening because of the desire to reset those systems or whether it's happening for other reasons, you can't control. All you can do is be in, right? So I think that is an interesting component of everything that's going on now. When we talk about resource nationalization, or we talk about just reshoring things, when we talk about becoming sovereign nations being more independent, like there's ways to look at that see the negative, but there's also ways to look at that see the positive for sure. Um, if we're going to talk about big picture, sort of the financial world, I am one of many to say that there's sort of no solution but to the mismatch between government revenues and spending. So that's obviously a huge thing. that is most significant in the United States, where the US dollar allowed that gap to get the largest of anywhere. And where not only is the gap the largest, but the advantage, the US dollar advantage that enabled that gap to be far larger than anywhere else, is eroding. So, and that's happening slowly, but it could happen quickly at some point. So I think that's a pretty significant consideration for anyone who's sort of looking around the world today. And then, I mean, you can't talk about the financial world without talking about tech, blockchain, AI. These things are transformational. There's no doubt about it. Anyone who wants to try and avoid that consideration is being ignorant, in my opinion. The impacts of these on, to just like slim it down to one thing, on even how the system functions, are only just beginning. Like if you think about just financial transactions, we still do them as though we're doing them on pen and paper. We just like use the internet to do a pen and paper transaction. That's largely still how the vast majority of financial transactions happen. And so that's just one example. That will change. And that's one example of how major financial transactions are the foundation of the entire economy globally. And so like the fact that that system is changing for good reason, is one example of the fact that these advances are going to change how we operate, why we operate, how quickly we operate. I mean, I'm not saying that we need to operate financially more and faster, but that is coming. And these changes have the potential to increase, our ability to accurately assess risk and value, but they don't guarantee that we will increase our accuracy in assessing risk and value. So there's a lot to be aware of as these are developing. So I don't know. That was a pretty scattered answer.
Well, I want to stay with you then on tech. I also see that's going to be a big part of our future. There's no doubt about it. But do you feel like if we look at the overall tech space or even AI, like, do you feel like they're overvalued?
It's funny to talk about valuation today. It's funny to talk about valuation because the gap between sort of what a US dollar is actually worth is becoming very wide and hard to make, like, wrap your hands around. So, I mean, like money printing, to use that term, which does actually capture it, has changed the game for valuations so dramatically. All of the historic norms that we have when we look back for the S&P or the Nasdaq or whatever, like none of them really pertain anymore. Even when you try and account for inflation, that's one lever that you can pull. But at the end of the day, the foundation is shifted because of the amount of money that's been created because of the US dollar being the reserve currency and the leverage and the demand for bonds and all of that stuff. So valuations are hard to talk about because the only way we can talk about valuations being stretched is relative to something. And I don't know what that's supposed to be relative to anymore. I know that's a bit of a sidestep answer, but at the end of the day, it's the answer that I come to. Like, I don't really know how to value these things or what to value them against, especially because they are, in addition to all of that, novel. And so all I can say is that even 5 years ago, I thought tech valuations were stretched. And they've continued, right? Not without correction, and that's fine. But like, if anything, the behavior of the market hasn't been insane. It's, there's been a constancy and a relativeness between stocks in the tech market that has some foundation to it. And yeah, and I the ground is shifted, and I don't know how to assess valuation from if there's no historic context for it.
And I think that is totally legit, right? When we see right now the fact that you're even talking about even dollars, like we don't even know what our dollars are worth anymore with the trillions of debt that I even find when I hear the word trillions or even see it, um, how much is actually, properly reported too as well, right?
Totally.
So going off of that, then I'm curious, our world is in serious trouble when it comes to the dollar, right? So I would love to get your opinion more on because you were talking about you don't even know how to value right now in terms of what a real dollar is worth, because it seems like it's worth a lot less than what it is actually saying. I'd love to get your opinion more on what do you see with the dollar in the upcoming years? Do you think it's dying, or do you think it's gonna hold through this?
I think I mean, dying is a very strong word, but it's never going to return to what it was. It's not going to resurge to becoming the go-to global reserve currency. Those days are done. And that's given, I think, how, and I'm not trying to sound elitist in some way, but given how few people really realize the significance of the dollar as a global reserve currency has been in enabling, the development of the United States and the quality of life in the United States. Um, given how few people realize that, simply the fact that that dramatic advantage is eroding and will not reestablish is incredibly significant. Whether it die, I don't know what the meaning of die really is, right? The US dollar isn't right. Like I said before, it's probably eroding slowly. It may at some point die quickly, but I don't have a timeline for that. I don't pretend to understand things to the depth where I would be able to have that sort of foresight. But the fact that the demand for bonds will only erode from here is causing already big problems for government deficit in the United States. And those are going to get worse. The major buyers of US bonds are not going to step up their buying. China and Russia, and lots of countries in the world that used to buy them hand over fist because they needed to, simply are choosing to not have that need. They're choosing to do bilateral trade deals in other currencies. They're choosing alternate routes of settling transactions, and therefore they don't need those bonds. And so that has dramatic impact. Now, whether it's the dollar dying, like I say, or whether it's just the fallout from that and what it's going to mean for the sustainability of how the United States operates, tomato, tomato, right?
Right. No, I think that's a fair answer. And something that I want to do go from here is, if we do study history, right? And if we look at, gold, gold has always been real money, right? So that's something that I know you know very well. And I kind of want to transition to gold now in terms of what do you see right now going on with gold? Because, in my opinion, I see that it had a huge kickoff this year, but even beyond that, even in the last, I would say even 25 years, gold has been doing very well. It's been doing its job, which is to preserve purchasing power. So I'm curious to get your opinion though. Some people are always thinking, day to day or week to week. This past week was very dramatic. And so there are always good reasons to also play devil's advocate in terms of, oh, what's going on now? So I'd love to get your opinion on what do you see in terms of gold right now, in terms of both the short and the long term, or even how it's going to be behaving.
Yeah, for sure. So I think your comment about the purchasing power of gold is always pertinent. I love the example for people to hold on to of like an ounce of gold has always bought a very nice suit, right? It bought a nice suit 200 years ago, 100 years ago, 50 years ago. Today, an ounce of gold buys a nice suit. And the same is not true for any other currency in the world. I don't care which currency you're going to pull up. There is no currency in the world where one unit of it has maintained the same purchasing power for hundreds of years. And so that's what we talk about in terms of like the staying power of gold, its role in the financial market. Um, and so then when people see gold suddenly go on a tear, it's easy for, I think, people who don't spend a lot of time thinking about gold, which is absolutely fair that there's lots of people who don't spend a lot of time thinking about gold, um, to conceive of it as though it's similar to an investment trend. But it's the opposite. It's an investment reaction, right? Or it's a financial reaction, not an investment trend. And they end up intermingling. Once the financial reaction starts moving gold prices, then of course investors get interested. So one creates the other. But it doesn't start as an investment interest. It starts, I mean, to some extent it does. There's always going to be people out there who watch for when gold is cheap, relatively speaking, and they buy it at the bottoms, and that's great. But in general, It's a financial decision, not an investment concept. And gold's move over the last 18 months has been kind of like, hey, to use an overused analogy, a bit of a coiled spring. Like it's a financial reaction that's been a bit postponed and postponed because people were like, well, we don't really want to think about it, admit it, embrace the situation that's happening. But sort of once at least some number of people start embracing the reality of these shifting of the erosion of the power of the US dollar, the shifting of geopolitics and what that all means, um, and start to think about it. I mean, gold is the only alternative. Like, if we're going to not have the US dollar as, if you have to name a global reserve currency and it cannot be the US dollar, gold is, I don't think it's only a gold bug who would say that gold is the next option, because you can't choose another country's currency without going down the same path that we've just been down, or that civilization has gone down many, many times before. So, over leveraging the power of a reserve currency has been the downfall of every great civilization, right? And so, and I'm not to say that, I mean, what I'm saying there sort of suggests that we're more advanced thinking than others have been, but experience does eventually teach humans. Just sometimes we're a little slow. Um, so, and then when I think about the people making this financial decision to buy into gold, what matters is when there's enough scale of people doing that, right? And so that scale in the last 3 years, and certainly in the last 18 months, has come from central banks, who, even as much as 5 years ago for the Chinese central bank, started like really deciding to do this, to start reducing treasuries and increasing gold. That's it. Like it's a it's actual balance. Like, okay, this one's going down, this one's going up. That's a very significant decision. That's a financial decision based on the global outlook. Um, and then once that becomes established and there's others aware of it, then people start thinking, okay, well, what do I do about this shift in fundamental financial reality? And then you have to bring in the conversation of groups like Tether. And when you're going to talk about gold today, you can't talk about gold without talking about Tether. Um, Tether is buying like many tons of gold a week. Tons. Like, we talk about gold in ounces because it's so darn expensive, but they're buying it by the ton. And what's really interesting about what Tether's doing is that not only are they leaning into gold, but they're sort of like, I mean, yeah, you've talked about this with others before, so I don't want to belabor the point, but like, they're buying US treasuries to backstop a dollar-backed cryptocurrency or stable coin. Um, they don't have to pay interest on that stable coin, but they get paid interest on all the treasuries. So then they're getting 4% on all these treasuries, and that's earning them $20 billion a year. Well, they're not just going to sit on those $20 billion a year, because fundamentally they don't believe in the US dollar. So they're putting it into gold. That's how they're buying that much gold on a weekly basis. Then they have this huge store of gold, and they're like, well, we might as well make more out of that. And so then they issue a stable coin that's backed in the gold. So it's a really clever setup. And what matters is that it got set up and then it grew, right? And now the scale of it is enough that even 2 years ago, when we talked about why the gold price was moving, we talked about central banks. They were the ones who had enough scale to be moving the gold price in terms of gold purchases. But now Tether is right up there for sure. And so until a couple of years ago, if you'd asked me about the price of gold, I would never have talked about supply and demand. I was like, it's artificial. There's always investment gold available. Like, it's people's choice. I didn't believe in it as a supply demand driven commodity at all. And I still don't think of gold as a commodity, but I think supply demand actually, because of this dramatic increase in fundamental demand, I think there is actually a supply demand component for gold. And it's not at the fore yet. I don't think people are buying gold because they're worried about a scarcity of gold right now. But I think those who have really long vision on this game are buying gold because of concerns about a scarcity of gold going forward. And of course, the scarcity risk factors into those who are in the gold space, right? The gold producers, who are well aware of how these things are, what projects are available to be built, and how we can produce more gold as a world going forward. So there's so many layers to gold. I really sort of went all over the place there, but it is fundamental to what's happening in the world today. The realignment of global relationships, the, you know, restriction on globalization. It's the bilateral agreements moving away from the US dollar, the erosion of the importance of the US dollar. All of these things end up encouraging central banks and investors of all scales to hold gold. They just all do. And it's going to ebb and flow like it is right now. Gold is down whatever $700 an ounce over the last 2 weeks. Um, but that doesn't concern me as a gold investor, because the fundamental reasons, there's nothing eroding those fundamental reasons right now.
Yeah, no, I totally hear you. And I would also say too, even on my end, for me, I'm not trading gold, right? It's my insurance. There's also a lot of great reasons that you brought up in terms of what's going on in terms of even like the future, right? With central bank buying and Tether and all this huge macro support of even geopolitics. But something that has been interesting that I want to ask you is Judy Shelton has been saying that she believes on July 4th, there could be a chance of Trump bringing up the action of gold being backed by bonds. If that were to happen, especially like the US dollar now switching to be backed by bonds for gold, what would that change?
Oh, it would it would complicate things. I think it would make solid everything that I just said
Mhm.
in a more complex way, right? Because all of a sudden gold is then being specifically named and structured as the new global reserve currency, but then it's also being intrinsically tied to the one that's dying. So there's a bit of a like push and pull in play there. But and I guess part of my hesitation in having confidence in answering that is I'm just so aware of how much bigger the bond market is than the gold market, right? The gold market is tiny. So you want to believe that the new global reserve currency in that situation, being gold, would be the one to be in charge. And, it would lead and the bond market would have to follow. But I can't be sure that that's the way it would be, because the bond market is the behemoth and the gold market is tiny. And so it would be very complicated. That's past me. That's beyond me.
Right. No, and that's totally fine. I was curious just because, there's been so much going on with gold in the last 5 years, ever since I last spoke to you.
Mhm.
Something that I do want to celebrate, and actually pay attention to, is the fact of how well it has performed and what that has meant for the mining space, which I know you are super passionate about and have always had a really, really good newsletter that I used to follow religiously. Actually, every couple weeks, I would always be reading your macro on what was going on, and then your micro. So I'd love to get your opinion on what this has mean for the mining space.
Yeah, yeah, for sure. Well, thank you for your comments about the newsletter. I really enjoyed writing it. Okay, so the mining space. Mining goes through these crazy cycles, right? And the cycles are self-reinforcing, which those of us who are familiar with mining know too well. But the cycles are self-reinforcing because when investor interest abates and then share prices fall, and then investors are less pleased, and then companies they can't deploy as much capital, they can't be as proactive about growth. And so everything shrinks instead of growing. And then the longer it stays shrunk, the more the feeders that would usually be sending new projects up to the gold machine also shrink, and a lot of them die. And then when interest turns again to gold, there isn't the supply chains for gold aren't there. And that's the same whether you're talking about gold or silver or copper, uranium, lithium, whatever. That's just the way the cyclicality of commodities works. And it's very inefficient and therefore really frustrating if you stop and think about it for a while. As a resource investor, you have to just not, because this is the way that it is. If you look over the last 15, 20 years, I mean, investors became interested in other things, and that's okay. I can't be mad that tech did what it did. There were lots of good reasons. And then so anyways, you can't be mad. It's just incredibly inefficient and frustrating. So with investors turning back to gold and the gold price going up, it means that it means that the machine is breathing again. It's looking for growth. It's getting bigger. And so that, just like the shrinking impact, flows all the way down the food chain, so does the growing. And it happens with reasonable speed, which is to say there's, quite a few people who have been waiting, good geologists and resource sector entrepreneurs who've been waiting for an opportunity for a long time. And those who have been able to gather enough capital to keep going have been slowly advancing projects. So it's not like everything's died. And if anything, it's a bit of a reset, which is to say that mostly, again, I'm painting with broad strokes, but mostly it's the not so good projects that die. And the good ones, even if they get really slowed down, they're the ones that will rise again soon. Or, the new opportunities that people have been so excited about in the bear market that they kept afloat by the skin of their teeth. Those are the things that come to the fore immediately. So it's kind of the bear market also acts as a filter, so that when the machine starts to breathe again and starts looking for new food, it is choosing from better opportunities than it was during the bull market when there was a gazillion things to eat and 50% of them were garbage. So it's a pretty interesting moment. I was actually just at a talk last week from the CEO of Newmont, and she was asked about things like acquisition, M&A, approaches to growth, over the next little while. And the resounding theme that she kept returning to was discipline. And it was interesting. The geologists around me generally shirked a bit at that. And they, because of the experience of the last 10 years, take that to mean, oh, they're not going to be active. They're not going to be buying. They're not going to be investing. And we're still hooped. Which is fair when we have long negative experiences that stymie our, ability to do the things that we think are worth doing. Those things sit with us. And so that's fine. I think that what she was referring to more is it's fiscal discipline. And that's a good thing. And so this is a conversation that, you and I have had, I think, and has been very common over the last 15 years, which is that in the last gold bull market, the last big one, 2004 to 2011 with the crisis in the middle, gold majors pursued growth for growth's sake. They all just wanted to be bigger, 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 bigger. And it wasn't the right thing to do because they weren't pursuing, they weren't being good. They weren't pursuing return on investment. They weren't pursuing, actually making profit. And I'm segmenting off the business side from all of the other components of a business and what needs to be pursued. But I'm just speaking from a business lens right now. They just went bigger instead of going for better allocation of capital. And I think that Natasha was focused on they need to chase ROI, not scale. And if you're going to be the largest gold miner in the world, you can't ignore scale. Or another way of saying that is you have the opportunity to chase ROI at scale, which is great. And you also have the requirement to do that because that's what your shareholders are there for to some extent. But pursuing economics, that makes sense. One example of that's near and dear to me right now is, and I'm not going to talk about this much, but the company that I'm leading now, we're searching for a kind of deposit that was poo-pooed in the last market. It's called a VMS deposit. And it has a bunch of different kinds of metals all in the same deposit, usually copper, gold, silver, lead, and zinc. And in general, in that last bull market, investors were not particularly interested in VMS deposits because they are they are often smaller. They're not porphyry deposits that are huge or IOCGs. These are the other kinds of deposits that are that often are very scale. Like their foremost characteristic is scale. Um, but this time around, there's a lot of interest in VMS deposits. And I think it's because they can generate really good returns. They can have very high metal grades. They can be lower cost to develop. And I think there's a growing recognition in the market that in between mining companies and investors that you can't ask for scale and grade, metal grade, all the time because those deposits are gone. They there's a few like every now and then there'll be a new discovery, but you know what I mean? Like you can't demand scale and grade. It doesn't exist. And so you have to choose returns. And you can get that through grade if there's enough scale and the other components that feed into, a construction decision make sense. But that's it. So I think that the big impact of a return of mining interest to the mining sector is that it's alive again. Projects are being advanced. Companies are being bought to some extent. And I think that the driving force for M&A in this cycle is going to be ROI on a project, not only scale.
Right. Well, I appreciate that answer. And it makes me actually want to go a little deeper here because I keep hearing, from some really trusted voices like a Michael Gentile or even Rick Rule, that this is a big year where companies are more, in terms of majors, their balance sheet, they're looking really good, right? They've had very high prices, lots of good profits, cash flow is amazing. And in my opinion, already in the last couple of years, I would say we've already seen a start of mergers and acquisitions. Michael Gentile was saying earlier this year that he feels like their rifles are out now, all these majors, and they're looking more now for opportunities. So I'd love to get your opinion on whether you think this is true or false. And what else do you want to add that you feel could benefit the everyday investor tuning in?
Oh, there's a bunch of layers here for sure. So I think despite the gold price having moved dramatically, I think that the general sense in the market is that from an M&A perspective, we're still relatively early. We're not in the first inning, but we're maybe in like the third, fourth, something like that. So we're still relatively early in the market, and that that encourages companies that are going to want to grow in this market to do it now. For a couple reasons. First of all, the longer you wait, the more expensive things get. Secondly, it takes time to pursue, negotiate, lock down, complete an acquisition, and then get to work on the project, right? These do not happen overnight. These happen over, 12 to 18 months by the time you're actually like from looking at a project to actually like a company's own shovels being in the ground active. These things take a long time. And so just from the logistics of M&A, valuation and logistics of M&A, yes, I think this is going to be a big year. One other I don't know how important this factor is going to be, but I'm thinking about it a bit these days, is that there's a lot of management in mid-tier companies and major companies who are getting to retirement age. Obviously that's a range, but who have been in the market for a long time. And it may sound like a bit of a crass conversation, but at the end of the day, if you're on the executive of mid-tier or major gold miner ABC, you cannot sell your stock in mid-tier or gold miner ABC, but you've probably been getting share-based compensation for a long time. You probably own a huge amount of that company. And so while absolutely there's executives out there who most mining executives are absolutely amped to have another bull market, to have a go at another bull market and do the transactions and grow the projects and do all of that. But everybody also needs to be looking out for their own family and, how they're taking care of their own wealth. And so transactions can liberate people to actually, sell stock. And so I think that will actually be that will add some motivation for transaction in this market, which is a bit interesting because often that is viewed the opposite way, which is to say that if you're trying to merge two companies, a lot of times something that gets in the way of a merger is that there's too many executives and none of them want to go. And so then you can't figure out a way to make a new executive team out of too many players. But this time I feel like that might be less of a problem because I feel like there's people who are going to want to say, perfect. I hung on, I did my work through the dark market. Now we have this amazing market. I like this business concept and I can step away. So I think that's also going to be a factor, which is I don't know how significant it's going to be. And I don't know if we'll ever really know how significant it's going to be. There's no real way to track that. But I do think it's present as a factor. And then it'll be interesting to see. One thing I don't know is, what other than looking for returns, which I just talked about, is there going to be what else might develop as a pattern in this market? Is it going to be more taking a strategic interest on an equity level in the company as opposed to buying a project? These things always play out a little differently in each market. I don't have a crystal ball on those details, but it will be interesting to see which direction those things sort of go. But I do think it's going to be a big year because the mergers that have happened, like you say, quite a few of them were sort of obvious ones, or the acquisitions were among the more obvious. And it's the more dynamic, interesting, clever, forward-looking type of M&A that I think we're going to see now. The groups that are willing to reach farther, that have been pushing hard for the last year already, trying to find something. I think those are the ones that are going to start showing up, and I'm excited to see what those are.
Right. Yeah, no, I totally agree. Something that I want to shift to, which we haven't actually spoke about yet, is more silver in terms of just it's been a pretty volatile year, I would say, if we look back a year of where it was and where it is now. And I'm also counting like with it going all the way up to triple digits and now doing a healthy correction coming back down. Just trading a little bit more above $70 now, I think maybe 72 as we currently speak. But I'm curious to get your opinion more on, it really is poor man's gold. There's so many factors behind it more than ever in the last decade of, it becoming a critical metal and also just so part of, also that also factor that I feel like the everyday person could relate to in terms of, what's in our car or our phone or, us doing this interview or AI, right? So I'd love to get your opinion on, you know, when you look at silver where it is, I'm not talking about price, I'm talking about just like big picture of silver. Do you think it is overvalued? It's had a very big run and then this pullback. What do you think of silver? If we were to look more futuristic here.
Yeah. Um, I mean, I I'm optimistic on silver for sure. And I'd say a bunch of what you referenced touches on a lot of the reasons why. I think that the ways that our financial system have changed in terms of how people get exposure to precious metals, there's various, like we say, stable coins and funds and ETFs and all kinds of ways that people can get exposure. So it's not just that gold's gotten expensive and therefore it's hard for people to buy an ounce of gold. I mean, that's true, but that's not really a limiting factor. But I think that silver, there's a lot of investors out there for whom investing in, you know, precious metals as a diversification or as a forward-looking financial move is novel. They haven't had to do it yet because we've had 15 years of a tech market
Mm.
and an ever-rising market. And so silver is a bit more accessible, right? It's easier to wrap your head around it because it is an industrial commodity. It's absolutely a precious commodity as well, but it's an industrial commodity. And so it if you're trying if it is an easier entry into investing in precious metals. It has a lower barrier, I think, for a lot of people. So that's cool. It has a lower barrier in terms of price point and a lower barrier in terms of just like for gold, you have to completely wrap your head around everything that we've just been discussing about fiat currencies and reserve currencies and bond markets and globalization. And those are big concepts. and silver is a little bit more accessible. So I think that that's one factor. I think that what you said about its just straight use profile exploding is the most important factor for sure. And then everything that I was saying about the cyclicality of mining markets obviously feeds right into that as well. It's not just gold projects and copper projects that shrivel up when investors stop paying attention to metals. It's silver projects too. And I think I'm sure you've discussed many times with others how silver is predominantly a byproduct from other mines that produce other, usually base metals. And so it almost gets an amplification of a metals bear market because, the silver price might not support silver mines. And then, in a slightly offset time pattern, maybe the zinc price or the copper price or the lead price goes down. And then those silver producing assets also close down. So there's kind of like a time frame, a slightly offset time frame amplification of, the lack of silver production or like a decline in silver production. So, and then what we've been talking about, like you mentioned, it's a critical mineral, its importance in defense, in tech, in AI. I mean, I put to you, what's your argument against silver? Like, what argument can you come up with against, other than, drinking the Kool-Aid and being a little bit too on board? I'm always acutely aware of that. But especially with the price where it is today, having corrected from the heights that it ran up to a couple months ago, it's hard for me to come up with, like, if I'm going to do a pros and cons list for silver, my cons list is always a lot shorter and the arguments aren't as strong. That's sort of like yeah, the way that I'll summarize it.
I appreciate that. Because I find on my end, I just always want to keep educating. And to me, I'm also aligned with, I see such a long-term hold here for silver, in terms of like its future. And a lot of voices that I respect, like whether it happens, in a couple of years or in the upcoming, let's say 5 to 6 months. But I've had some technical analysts come up with numbers of, 150 to 500 in the upcoming year. And it's kind of overwhelming, honestly, for me to think about that, even though I know that there's such a strong base after 45 to 50 years of it just being completely manipulated and controlled. But even on a fundamental level, I know Peter Kraut, who you're really close friends with, his book, he breaks it down in a very conservative, fundamental level as well. He'll talk about the gold to silver ratio and all these things that really justify going to over $300, no problem, very conservative. So I'm less worried always about time. I find as an investor, too many investors are, again, looking at the day to day or the week to week. When
Mhm.
really, I think that the time frame is really not always a concern when, like it's not if it's going to happen. It's
Yeah,
just when
it's
it will
just,
happen.
yeah, we just can't
Um,
control when.
these realities of when you hear these numbers, like some people are saying, $1,000 silver, 500, without focusing on the price prediction, how could you quantify that you feel this is not at all insanity?
Yeah, again, I like that you say that without focusing on the number because numbers are whatever, slippery. Um, I think it's context and duration of interest to date, right? When we look at how short so far this precious metals market has been, this metals market has been. I mean, I started by saying that valuations are hard to pin down, right? Because the dollar is changing and I don't know how to value the, tech stocks and the S&P and whatnot. Some historical comparisons I think do remain pertinent for sure. And one of those is like durations of cycles. And in mining, they're reasonably reliable. The shortest mining markets are the ones that we don't necessarily refer back to as being mining markets, but they meet the bar, and so they are such, like 2020, right after the like in the wake of COVID, and that qualified as a gold bull market, even though it was obviously unusual in lots of ways. But if you look at the gold and silver bull markets that are driven by macroeconomics as in a more general or more normal way, conventional way, you know, 2 years is a very short bull market, and 4 or 5 years is a more normal bull market. And so I just feel like from a duration perspective, we're still young. From a solving the things that brought the interest here perspective, we're still very early in that game. Like, I fundamentally believe that if investors are going to turn their interest to a space, I don't think that interest in that is going to stop turning until at least something has been answered, right? If people are turning because there's a big problem, you got to at least start to see that there's a solution to that problem before people are like, okay, we've been here. Maybe we should look for the next big problem. But I don't think we're anywhere close to that yet. We're nowhere close to creating enough new silver supply to meet the gap in demand. Like, not even vaguely close. We haven't had enough investor interest to address the cyclicality of mining and the shrinking of the projects that feed up. So there's a time frame and that hasn't played out yet. There's a scale of problem and need for answers that just isn't here yet. That's my answer to that.
Something that I want to transition from there is you keep saying that we're early, right? And so whenever I think early, like even going to a party, usually not everyone knows about the party yet, right? You're early. So something that I've always admired about you beyond being very educational is your contrarian mindset. So I'd love to hear more about when did you first develop maybe a contrarian mindset for the world of investing? Because you've been very early and it's still early, but I would love to hear more.
Well, that's yeah, interesting question. So I think hmm, I fell into mining happenstance. I graduated from my master's degree. I have a bachelor's degree in chemistry, and then I did a master's degree in journalism. Obvious partnership there. And then I got a job at a newspaper that was about mining, and I knew zero about mining before entering that newspaper. And so then my job for 5 of the next 7 years, was to ask questions until I understood. That's the amazing thing about being a journalist. That's literally your job. Um, and I was also doing it at a really interesting time. I started at the Northern Miner in 2007. So there was like 2007, which was this bull market insanity, into 2008. And then we had this financial crisis. And then we had the metals market rebound out of the financial crisis, like on a tear. And going into 2010 and into 11, things were still hot and heavy. And then we had this bear market that sort of went until 2015. And then there was a bit of a lift in 16, 17, and then it went down again, and then COVID, and here we are today. And I say that because I, like you, obviously, you got to search out expertise, especially when you're starting in a new space. And so you search out expertise and you find people, and like the concepts that I've been describing today I am not the first by any stretch, right? These are concepts that I learned from experts in the space. And it's one thing to hear stories about cyclicality in metals, and it's another thing to live them. So I had this really phenomenal experience where I lived cycles in mining in fast forward. Like, we were in a bull market. We had the great financial crisis. We were in another bull market. Then we fell off a cliff again. And I learned cycles in fast forward. I had this unbelievably quick immersion into something that would usually have taken 25 years to play out. Instead, it took 4 years to play out. And so I just lucked into that. And I was doing it at a time when I was a journalist and wasn't investing much. So I didn't get deeply hurt. I also didn't profit significantly, but I watched it all happen. I watched tech go down to $3. Like all of these things. So, like Tech Resources, the mining company. So, that's where what I had heard from experts in the space about being contrarian actually started to resonate. Because, like, I'm a parent. I can say things to my kids. Most of the time, they're not going to believe it until they experience it. And then they're like, oh, yeah. And they'll never say, oh, you're right. But like in their head, they're acknowledging, oh, you were right. And we all have that to some extent. We listen to experts. We read books. We hear it. We understand it. It makes sense. but it's really hard to act on it, especially when it comes to money, until you've actually experienced it. And that's just part of being human, I think. And so my experience of fast forward of metal cycles in fast forward in early in my career, that's what taught me to be aware that being contrarian is the only way to make it work, basically. Because if you're behind the curve, if you're following, then you've already missed a huge part of the opportunity.
So let's stay there then. What were some lessons that you've learned in the last, sounds like it's about 20 years that you've been in this space?
That the risk reward graph is the most important thing in investing. Just if you wanted to just teach people one thing, throw out all the books and the podcasts and the whatever, you know, risk, reward, potential. And it goes like this. And you cannot have high reward potential without high risk. It is impossible. So that that happens in spades in junior mining for sure. Um, One lesson that I had to learn many times that took a lot of experiences before I really learned it is to stop falling in love with stocks.
Mm.
And it's almost a downside of being so close to the industry because you get to know the people and you understand the history so deeply and you want to believe that the discovery is around the corner or the permit or the whatever it is. Um, but falling in love never helps. It's not does not help you make good financial decisions. Um, that being early is a lot like being wrong. So that's a risk of contrarianism, right? So if you see that something is going to turn up, but you're several years ahead, that's a lot of long time for your capital to be locked away. And in that time, not only is it locked away, but it could still be eroding, right? Because if it hasn't started to move up, it's probably not perfectly sideways. It's probably still moving down. So being early, so then averaging into any decision that you make as an investor, as opposed to just jumping in because you've made a decision, um, is going to play out better for your portfolio in the long run. It's not going to play out better for every specific stock, but overall, it's going to play out better for your portfolio to average in and out of every position. I mean, on the out, there may be a catalyst or something that's a difference maker. But anyways, um, and that different stages. This one's very specific to mining, but for sure that at different stages in a metals market, different kinds of companies are more likely to attract investor attention versus other kinds of companies. So this is the classic where when investors are first starting to pay attention, it's the majors and then it's the mid tiers and then it's the single asset producers and then it's the developers before it flows down into the explorers. That's again one of these lessons that the experts will tell you, and I believe it very strongly now.
Right. I love that. Well, I appreciate you sharing those lessons. And I kind of am curious to hear more about mentorship. I'm sure, Gwen from 2004, I believe you said. I'm sure you were a lot younger, a lot more, just had
Wide-eyed.
some questions, right? So I'm curious to hear about, over time for sure, you've met experts. You've also, um, you know, gone to different parts of the world to even see some of the mines yourself. Talking more about the people here. Who are some mentors that came into your life?
Yeah, a good question. So, I mean, before naming people, I think the most important comment that I would want to make about mentors is that it's very difficult to not be shy around mentors, but it's important to try to not be shy. The whole structure there, the whole dynamic is that they know a lot more than you. And so it isn't a job interview. It isn't about you trying to suggest that you know. It's about you wanting to know and exposing your reasons for wanting and, the structure that you have, the knowledge that you do have and what you want to layer onto it and like where your curiosities go. And that's what mentors are there for. So that's another lesson that it took me a while to learn. I used to be quite shy or shy about exposing what I didn't know around people, which I think is very common when we're new into an industry for sure. But if you find people who you can develop comfort with and you can you're able to push that shyness to the side and actually just ask, that's really, really important. Um, so I mean, there's like different categories of people. I mean, there's people who have helped me on figuring out how to trade junior mining stocks very specifically. I mean, I'd name someone like Eric Coffin in that category. Eric has been a friend for a long time. He obviously ran a business he ran a business of the same nature that I did. Mine is, you could call it a copycat of his business because he's much more established, was much more established. Um, but his experience in all the things junior mining, I leaned on lots. Whether it was, what do you know about this guy? Or have you seen this project before? Or this is a weird structure for how this deal is put together. Or why is this stock trading so strangely? Or like junior mining is a pretty specific world. And so finding people who are deeply in that world and who you can ask those questions to can be very helpful for sure. Um, there's quite a few people in that category. I think having a good broker who you can lean on as well, or a crew of them really, both to ask questions and to give you stock ideas is important. I've worked with Graham Moore of Haywood for a long time, and I'd certainly put him in that category. Um, then there's people who have been really interesting out there in what they've done in the junior markets. I mean, Dave Cole of EMX, which is now EMX Royalty, which is now Elemental Royalty. He is someone who's I've always found fairly fascinating. He's like, the business model that he developed was different. He used to be a royalty generator. He realized, or he used to be a project generator. He kind of decided as a group that that was a difficult business model, especially in a bear market. They switched to being a royalty generator. They pursued strategic investments. They went to parts of the world that most companies weren't willing to go to. I mean, they've done a lot of very interesting things. So having conversations with them about how they make those business decisions with the entire EMX group about how they make those business decisions, there was some pretty enlightening stuff in there, to be very sure. And then when I joined West Red Lake, that was my first experience being inside a company. And so I learned a huge amount from being inside, being an executive member of a mining issuer. And so, I mean, Shane Williams is the president and CEO of West Red Lake. I learned a huge amount from Shane. He's a wonderful human being. He's a very strong leader. And so whether it's everything from governance and pay structures and contracts through to be honest, a huge amount of how do you actually build and put into production a gold mine. He's an engineer, so there was a lot of that. And then navigating the capital markets and how you manage investment bankers and, a lot of learning there. There's also, you got to make friends. If you're going to be in this world, you got to make friends on the investment banking side too, because they're going to give you all kinds of insight into how deal making actually happens and what the real pressures are and what the motivations are from different parties that are involved. So I haven't had one mentor who has stood out head and shoulders above the rest. What I've always been lucky to have is quite a significant crew of people that I can rely on for all the different kinds of questions that come.
I really appreciate you sharing your list of mentors because I always feel, you talked about what you didn't know and then what got you, curiosity to then push through to learn more of what you didn't know. Right. And I find circle of competence is always a big thing for me is what do I know and what do I not know? And
Mhm.
whatever I know really well, how can I keep getting better at it? Keep refining my craft, Um, so I appreciate you sharing, just people that have had impact on your journey there. Something that I'm curious to ask is, I think beyond probably even you investing in the junior mine space, now also too, I want to congratulate you on becoming a CEO too of an upcoming company, Alex Metals, which is super exciting. I'm curious to get more like, what are some investment principles of Gwen Preston that you've developed over the years that if you were an investor in any space that you would have to think about?
Yeah. I mean, these are all particular to me, which is to say that I always have found myself not inherently driven to investment, which may sound surprising, but when I was a kid, like we had the Globe and Mail on the table every single day, and I would read most of it except for the business section. Through my entire childhood and teenage years, I would read everything except the business section. So I was not like naturally interested. Then I went and did a degree in chemistry. You can't get much more detached from investing than like being in an analytical chemistry lab. Um, and even in journalism, I was looking at health reporting and so I have become an expert at investing in this sector because that's been my focus for 20 years. And when I decide to do something, then I lean in. Um, but for me, it's been very important to segment out capital and give it to people who have expertise outside of the sector. And that sort of requires me to accept completely. It's kind of like your circle of competence comment, right? Where what I can do well and what I have no idea about, right? I mean, even parts of the conversation we've had today, like I obviously have a picture of what's going on in the world. I think it's incredibly important as human beings to be aware of what's going on in the world. But I can't tell you what's going to happen, what that's going to mean for treasury yields in 6 months. I can't tell you, you know, how to get the best yielding portfolio for that component of what you're looking for. I don't know what's going on with industrial stocks. I don't.
Mm.
And so like say understanding my competence and then segmenting off capital to people who have much different competence. That's been a really important lesson for me. Um, and then overconfidence has been a really important lesson, like believing that and then getting hit when something went different and you realize that you let yourself believe so deeply that you knew that you didn't pay attention to risk. So that's a pretty important investing lesson, I think. And then a huge amount of it is just, this sort of relates to the circle of competence thing, but it's also just about time,
Mm.
which is time is really hard to come by. And investing well takes time. And I think that's not a surprising statement. I think a lot of people in the world um, get an investment advisor, a wealth manager, whatever it is, to manage their investments because of some combination of not believing they have the competence and or not believing they have the time to develop the competence or the time to manage what that competence would even generate, right? Like it just takes time to do these things, right? Like to follow what's going on in the world, to understand oil prices, to understand all of these things. It takes time. And so competence isn't just about what you know, it's also about what are you putting your time into. And so I have required myself to really slim down, not really slim down, I shouldn't say that, but to realize what I can and can't bite off.
Mm.
And if I'm going to be a mom and have a job that is, pretty busy and consuming, and be involved in my community, and try and take care of myself, then I have to realize that there's limits and that I can't also, um, increase my competence in a whole bunch of other fields and then manage things that I create based on that competence. So yeah, time is a reality and it can be a harsh one sometimes, but that's a big lesson for me is time.
I appreciate your honesty with all of those. And I am curious, Gwen, just to kind of shift here a little bit more personal, but I've met personally a couple of Gwens. When I first met you, you were talking about ultras, so the athlete Gwen, journalism Gwen, investor Gwen, newsletter Gwen, CEO Gwen, mom Gwen, right? So lots of beautiful titles here for sure. But I always find it's really important to go beneath like the titles. So who is Gwen Preston?
I'm someone who always wants to understand what and why. I am lucky that I have, s- a, a healthy I've had, my childhood, my education and all of that. Like I have a good brain, so to speak. And so I have the ability to understand a lot of things. And I mean, I love understanding why. And therefore, and with that, being able to figure out what next. So I think, the always wanting to learn and progress, that's very fundamental to me. Um, I and then I'm always driven to, if I'm going to do something, I'm going to do what I can to do it very well. I believe that life isn't about pursuing happiness. Life is about pursuing growth, and that's a big word. And growth, as it encompasses, as your world grows and encompasses and perhaps starts to support more and more things, there's a lot of challenge in that. But I think that pursuing growth is probably the most fundamental thing about me, because that's what I'll do every day. And it's whether I'm figuring out how to be a Girl Guide leader for my daughter's Embers group, or whether it's understanding how to start engaging with the communities in the Alaskan Panhandle where the projects are for my new company. I mean, I spent 3 hours on the phone today, just sort of understanding the lay of the land, and right. Or whether it's becoming an ultra runner and growing in that. These things are not easy. And I believe in embracing challenge, because if you don't embrace challenge, then you don't grow. And if you don't grow, then then it's a bit judgmental to say, but then I think the happiness that you're living in is probably a little bit thin or false, or, at risk of being toppled, because you're not feeding it. You're not maturing it, evolving it with you. Um, so yeah, someone who always pursues growth, but then someone who is very, I mean, compassionate. I mean, I want to support my communities, my family for sure. Uh, and again, if I'm going to be part of something, whether it's being part of my family or being part of my community, being part of my company, being part of my industry, I want to try and do the best that I can at that. Which kind of cycles back to this whole time thing. I'm also, I think, an outsider looking in at me might describe me first as being very, very busy. Um, but that isn't a frantic outcome of stuff. That's a choice. I choose to be busy because I want to lean into all of these incredible opportunities that I have and make the most of them. And I'm always aware of when it feels like it's too much. And that's something that requires constant management. But busyness is a choice. It's something that is an outcome of how I want to live, because we only get one chance. And so, but then if I had to choose just one word, I mean, being a mom is very, very important. I have a 3-year-old and a 7-year-old, and those are very small people, for whom I am a big, big part of their lives, and they rely on me and my husband, of course, for so much social, emotional, understanding the world growth. That's really, really important.
I love that. Well, I appreciate you being vulnerable there and going there with me, because you've always stood out as someone that I've met as very strong values. And whenever someone has strong values, you don't just see it. And it doesn't matter where they go, where they live, what they're passionate about, you go all in. You have a lot of integrity, a lot of passion, and a lot of love for what you do. And not just for what you do, but even for others. So when you just spoke about even, caring for the community, that's something extremely accurate. Something that I want to kind of shift to, with everything going on in the world, or even lots of things that we spoke about today, it can sometimes be overwhelming, even just the amount of debt or even war or there's a lot going on. And sometimes I'm always concerned about, even what brought me into the financial world was beyond even just finance. I really do feel the world is going through a lot of challenges. I think people will be challenged in also a spiritual framework as well. But I also believe in if we study history, we always get through this, stronger and wiser, hopefully. So I would love to, before we close off, like, what is some positive messages that you want to share with everyone that's tuning in about how to move forward or how to see things? And on top of that, too, like feel free. I'm sure even when you're in moments like this, you're not just here for you or even your communities, but even your little ones that you just spoke about, or even your husband. So if they were tuning in and they were listening, what would you want to also share for them to hear as well?
Yeah, interesting question. I I would want to share that it's so funny. We watched I'm laughing at what came into my head. We watched with my kids half of the Finding Dory movie last night, the sequel to Finding Nemo. And of course her song is just keep swimming. And that came to mind because what I was thinking of is you I was down at PDAC. PDAC is this huge mining conference and it's super overwhelming and it's very long, and people talk about how a huge number of your colleagues will come up to you and they're like, "Oh, aren't you exhausted? This is such a long conference." And I don't generally get exhausted, and I think the reason is my approach is quite specific. I take it one conversation at a time because that's what you're there for. That's where the value is. That's where the potential for growth is. You never know what each conversation will bring, whether it's someone interested in what you're doing or you interested in what they're doing or things that you discover together, whatever it might be. So you just have to keep going and within a framework that makes sense for you, whether it like a values and call it sort of operational framework in terms of like, just making sure you're satisfying your needs and your family, whatever. But like you just have a huge amount of life is just about leaning in and making and trying. And if that is something that is unfortunately like can feel rare sometimes is people just really, really trying. I think one of the big markers of success is people who just work super hard. And I'm not to say that if you work super hard, you're guaranteed to make massive success. I wish that were true. But if you don't work super hard, you're unlikely to make massive success. However you define success, I don't even care how we're defining success. I don't care if we're talking about a marriage or whether we're talking about an athletic pursuit or a company or whatever. You have to try. My marriage takes work. My company's going to take work. My kids take so much work. But people, if someone asks you, "Oh, you're so busy, how do you do it?" The answer is, "Well, what's the alternative?" Like instead of I'll say it this way, instead of like bemoaning a challenge, I think about, well, if I wasn't doing this, then what's the outcome of that choice? And if it's, not being there for my kids, if it's missing an opportunity for my shareholders, a big one, if it's, not providing being there for a community event or a community member, I don't want to do that. And of course, there's balance here where you can't do everything. So I'm not trying to say that everybody should spread themselves thin and chase a million things. That's not what but you have to decide what you're leaning into. And if you lean into it, then you have to do it. You have to get up every day and just keep swimming um, because that's the way to find the most opportunities for growth, find the most opportunities for engagement, for love, for connection, for whatever it is just getting up and doing it. And it's not easy. And there's aspects to it that are harder for some people and easier for some people, and all kinds of things influence this. I'm not trying to suggest that this is easy, but it's really fundamental, I think.
I love that last note. I feel like so true. When anything gets hard, to not give up, to have that perseverance, to keep swimming. So
Yeah.
I love that message. And Gwen, I just want to take the last little bit of time. You've meant a lot, not just for the podcast, but just like the whole relationship. 6 years ago, the amount of learning when I was curious to come into this space, or even just even education on the macro front when I was learning about even just the very interesting people that are involved in the mining space, like the mining titans. But just in general, I've always really appreciated you beyond the investor relationship, just more like person to person, human to human. So I would love to just take this last little bit of time, to wish you all the best with Alex Metals. I'm super excited to see you in that spotlight as the CEO. And more importantly, just to say, I'm really looking forward to continuing growing a beautiful relationship with you.
Well, thank you, Ben. Those are very, very kind words. And yeah, it's been amazing getting to know you as well over these years and seeing your evolution in knowledge and in what you're doing. Um, I love, pe- I love people. People are phenomenally interesting entities, and the more that you can get to know, the more interesting people you can get to know over your career, your life, I should say, the more that's to your benefit. So thank you for this. I mean, this has been a great chat as well. Just we haven't done this for a while, so thank you.
Awesome, Greg. Take care, and I'll see you soon.
Sounds good.